Yo, good morning, everybody. Sup, Tony? So this will be our last live call for this beautiful year of 2025. So yeah, we'll see what happens. Hopefully you guys had a good weekend. Hopefully you've had a good week so far. And let's see what we can get into. So let's look at this. So we just had a small news event. PMI comes out soon. 6:45, we have Chicago PMI. FOMC meetings, the minutes, meeting minutes. It's not necessarily as dramatic, but it still could make things lag in terms of what they're trying to do. It's something to definitely be aware of because it's in the PM session. It may cause the AM session to be a little wonky. So again, it's the second to last day of the year. We got to be cautious, drop your risk. I'd be irresponsible if I told you, yeah, guys, let's go in there and, be aggressive. It's not a time to do that. So, with that being said, we also have unemployment claims tomorrow. This is a day before a holiday, day of a holiday, day after. So you guys know the rules. It's low probability. Does it mean there's not going to be an opportunity? No. There probably will be an opportunity. But again, it's just one of those things. If you know bombs are blowing up in the battlefield, are you going to rush out because you want to hurry up and get to the objective? Or are you going to be cautious and be a lot more methodical and calculated before you decide to make a decision? It's the same thing here. These are hypothetical bombs blowing up. All right. So we got to approach it in that way. So yeah, we have news coming out after 6:30, so we'll be waiting for 6:30. So yeah, just be cautious today, okay? With that being said, let's jump over here to this. So nothing's really changed. Nothing significant has happened really when it comes to the yield, to the bonds. And the yields too, they're still pretty sideways. The Fed chair situation is going to be important. I think that if he was to fire that person because of the drama that comes with that, it would cause uncertainty, or it cause the market to view that as uncertainty. So, we definitely want to keep tabs on this, see if that happens. But, until something gets pushed into the conversation about interest rates, I think, nothing's going to really change here. The things that we are observing still this for value gap, we want to see if this is going to act as a supportive level to then try to get us up to these levels still. And our validation levels are still the same. We're still looking to see if we could stay above this. And as long as it does, right, we shifted here, change the state of delivery above a monthly bullish order block. And we're kind of back inside of this range too, from this high to that low. Stops taken here, stops taken here, this high to that low. You could do this high to that low, but regardless, we're still basically in the middle of the range, no matter how you slice it. So when we're in the middle of a range, a lot of times that leads to choppiness. Plus you add the fact that it's that time of year to expect choppiness. We're also at equilibrium from this low extreme to the high. And you can kind of see what price has done as a result of that. It's promoted sideways, not really too excited price delivery. Okay, so those are my opinions on the bonds and yields. So they're kind of just to the side right now. Then if we come over here and we look at the DXY, if we look at this weekly chart, we're basically pulling back. Let me take some of this off. We're basically pulling back into this wick here. I talked about this as a possible market maker sell model continuing. We'll obviously see. We have to observe how this is going to be respected. If it's not respected, and we were to break above this high, like I mentioned on Sunday, that would be enough for me to think, okay, well, we're going to need some dramatic price delivery back to the downside to continue dropping if that was to be taken. It's more likely, though, that this would change the overall delivery. It would basically, get up above this order block, change the state of delivery, and then we'd probably reach for a little bit further buy-side targets. But yeah, with that being said, we're not quite there yet. So we'll just have to be patient and keep our eyes on this and then assume that price may want to continue to go lower. All right, because nothing's changed overall. And if we go to the monthly chart, if you looked at this view and it was the 5-minute chart, what would you be believing? What would you be thinking right now? It doesn't look like it's overwhelmingly bullish to me, right? We did take out this liquidity. We are bouncing around a quarterly fair value gap, but we also just came off of a very powerful reaction from this quarterly bearish fair value gap. So we're kind of stuck in between this one, this breaker, order block, whatever you want to call it. You can just see it kind of has both of those layered together depending on which time frame you're on. Still the same price, same behavior. And then we're stuck also, like I said, below or inside, slightly above. I guess we're inside of it now. This quarterly fair value gap. So we'll see what happens, right? I'm going to still assume that this is probably going to continue to be interested in going to the downside. Again, unless it takes out this high. Okay, so we'll see how today unfolds. We do see that it's kind of pulling back into this level. So now we'll throw these back on. We'll kind of zoom into this. All right, so we got to gauge what the response is going to be here. The most near-term liquidity pool that is being targeted potentially is going to either be this low or the high right there. That's the previous day's high. Okay? Got like a lint in my mouth or something. So yeah, we'll see. We'll see how, if it gets above this, we'll see if it can give us a reaction lower. It may, again, wait for the FOMC minutes meeting. We're just going to have to see. But because that meeting is in the PM session, we got to come into this session not really, demanding too much, because they may simply be waiting for that. Remember, higher time frame levels, for those of you that have been with me for a while, higher time frame levels and PD arrays are traded to or away from, generally off the basis of a higher off of a news event, right? A red folder news event. So if we don't have that red folder news event taking place, it's just like taking trades before macros on the lower time frame. It's just the news releases act as macros on the higher time frame, right? For a higher time frame delivery to a level or away from a level. Okay, that's a gem I've been talking about this year. Very, very powerful gem. And then of course, like I've mentioned before, we want to see higher time frame levels get hit before we start to consider really, anything dramatic taking place, right? Trading to those levels can be framed though off the basis of a red folder news event, and then trading away from them, like the actual response away from them, can also be framed around a news event. Generally, that's what it takes, because institutional sponsorship comes in generally around those news events, right? They use it as their, distraction, their reasoning for whatever move they try to do. Just like how the macros are programmed to spool price, regardless of whether people say they're not real? They absolutely are. But yeah. So I got my attention right here for the DXY. If we want to now pull up the 1 hour chart. Okay, it's a mess. It's a nasty mess in there. You know, it is kind of opening up here. And again, the clearest target is this previous day's high. And that previous day's high is coupled with this daily volume imbalance. So the previous day's high may be collateral damage as it tries to get to the daily volume imbalance as the main objective. So we'll have to see how it wants to react inside of this. We also, if we're looking to frame an idea up into that level, you have the inversion fair value gap here. Should act as a BPR. So as long as it stays above the 50% of this fair value gap, I'm going to continue to try to see if we can get up there. And then however it reacts up here is going to, you know, heavily influence what I believe for the rest of the session is going to take place. So hopefully that makes sense to you guys. Hopefully it's easy enough. And if that takes place, it now starts to make more sense why this could potentially be likely to retrace. You know, as we see, it's basically starting to do that. Okay. Same as the DXY, having a volume imbalance on the daily above. This has a volume imbalance below because the euro is damn near lockstep with what the US dollar's doing, just to the opposite direction. Okay, so you see I have a BPR here. This high to that low, 50% of that we don't want to see taken if this is going to continue the run higher, right? We're going from stops to inefficiencies, and we want to go back to stops once we target this internal range liquidity. You know, when price expands like this, and then a fractal high forms on the daily chart, your expectation systematically should be that price is probably going to retrace a little bit, hit that internal range, and then once it fulfills that, using a news event to get there, or if it doesn't need one because it's really quick reaching for it, we definitely want to use a news event to frame out the timing for when this is going to push away back in line with the narrative. Does that make sense? Hopefully that's simple, a simple process, a systematic process. It's definitely very repeatable. So I hope it's systematic for you guys too, and you can go apply that that logic. When you see an impulse, you see a fractal high, expect the next 1 to 2 days to reach into a logical level that would reasonably be used to push us back in line. Okay? Chat disconnected. That was strange. Can you guys try to type something in real quick in the chat? It says it was disconnected. That's weird. Okay. Okay, good. Yeah, that's strange. Okay, now it says it connected again. All right, I appreciate you guys. Good morning, Fancy. Appreciate you hopping on. But yeah, so that's kind of my opinion on this. You know, we'll see kind of how price wants to deliver when it takes this low. I believe it could reach into that low. If it doesn't, it's even more likely that we're going to blow these highs out pretty quickly. It may look to hold because of the FOMC minutes, though. So we'll see how things transpire going closer to the 6:30 time and beyond. So now if we take this to the 1 hour chart, get a look at what the Nasdaq's doing. So again, we still got that SMT we got to keep tabs on. Not much has changed, you know, the last couple of days since Sunday. It just looks like it's reached lower into this, kind of rebalanced the whole entire previous candle pretty much, minus like the little lower portion by the wick. We're still inside the inversion fair value gap on that weekly chart. Wait, is it on the weekly chart? Yeah. It's on the weekly. Okay, it's the 2-day. Wasn't the weekly, it was actually a 2-day. Two-day inversion. So again, we'll continue to see how price wants to respect that or not. This is a weekly bullish order block. So definitely throw that on there. So yeah, as long as price wants to stay above levels like this, which again are just inversion levels. You could see this is a daily inversion. And if it stays above that, we'll continue to look for price to go higher. We did kind of railroad this, right? It kind of went up and went down again, closing in the whole thing. So we definitely want to keep our eyes on the, if we're looking at the Dow, we got to keep our eyes on how this is reacted to, if it ever even gets up there. Because if it doesn't, and it sends a candle up into that, and then it fails, I mean, that's a pretty solid confirmation. We'll have one change in state and then a second change in state, and then that'll probably send us lower into, all these lows and things that are a little bit deeper quadrants inside the fair value gap here with the volume imbalance. So yeah, but for now, my opinion is, okay, let's see how we continue to respect this. Let's see if we can stay above this daily wick 50% level. That'll be significant going into the open. And this is simply a graded price swing. So 25, 50, 75. We're inside that 75%. This is also, we've been talking about this is also a market maker buy model. So we'll see if that wants to continue. And if it does, we should be able to get price to get above the 75% here. We do got a 4-hour inversion. Okay. So we'll see how that wants to behave. These are all just like preparation levels, right? So when we go into the 630, we got to see how are these things going to be respected? Are they going to be respected? And if price stays above those levels, we're basically painting out the narrative and what should allow us to trust buy side will continue, at least from that higher time frame. And then, of course, we use the lower time frame to also gauge, looking at the wicks, looking at the order blocks. If they get traded through, are the 50% levels being respected? This one's been respected here. Looks like prices had a hard time to get up through that level. And that's also the upper portion of the 4-hour fair value gap. This was, I believe, a previous daily wick. So yeah, we'll see what happens with this. If it does decline through that, from this low to that portion up here, 50% of that's 75%, right? 75% of the whole wick. Because if we go to the daily chart, you can see the wick here. And you just take it from that upper portion to the low, you can get 25%. Or you could just slap on the fib with the quadrants. Just a little variation on how you can do that. So you don't have to keep flipping to the higher time frame. So yeah, if it gets below that, we'll see what happens. If it does try to get below that and we show little to no respect to any of this, we do have a potential candidate for a low resistance run. It did take this low out, but we could see that beyond that, we have a failure swing in here. we do have this as a possible market maker sell model, right? So if we were to close below this, it may rapidly get down there, especially because it has the failure swing here with this low and that low. And it's also coupled with this gap down here, right? So that may lead us to, price reaching down into that. And then how price responds below this low, that's going to be something I'm going to find significant. If it just blows on through it, these may be early signs that price is, going to give us that manipulation phase of the yearly range. We may be getting a initial sign that that's what's going to take place. If we come down to the 5-minute chart, so short we talked about the other day. But yeah, we have a lot of built up liquidity in here. It looks like it's really having a tough time getting up there. So, we'll continue to see how the open takes place, what DXY is going to do as we go into the open. Remember, the price is reaching up for this particular level potentially. So let me actually take that to DXY chart. So hopefully you guys kind of have a foundation of what we're looking for today. We have the low here, possibly, it's possibly going to get down below this. We're definitely going to watch this daily wick here, how price chooses to react against that. We have the London low here. So that's an even earlier liquidity pool to map. And then we have the London high as well. London low. Then the London high right there. So even before it gets up to these levels, if it was to go higher, it would have to reach to those first. But I'm going to try to see what happens at the open. We'll see if we do want to get down a little bit deeper, maybe hit this level. Once we hit this level, that's going to be, a real deciding factor, depending on how it responds down there, as far as whether it's going to keep going lower, especially if it blows through this new week opening gap, which you could see here, and then uses it as resistance. That would, again, start to build the narrative the price is going to really reach down, potentially deeper. But for now, we need to wait for something to support us. If we are going to go higher, it's going to have to displace, give us some more movement than just this manipulation sideways consolidation. We're not here to rush into things, and sometimes we got to wait. And we got a good idea of what the higher time frame is potentially telling us. Still bullish, possibly just a retracement. Levels that could be reactive could still be this here if it does choose to respond away from that. Preferably, I'd like to see the 50% of this hold, but if that doesn't, the next level is this, then the next level is the low, and then a new week opening gap. And then, of course, the mid portion of this is also a candidate for possible support. And if those things just start to give up, then what's the point in rushing to force a buy? You'd have to submit and then try to see if there's something that we could reach for, potentially going lower. Again, there's a potential framework for price going lower here, being the market maker sell model, right? The overall narrative is still not yet fully committed to sell-off, right? We see across the board that we're in levels that we have to monitor as far as whether they're going to hold or not. You can't just assume, right? I mean, you can, but again, is that going to be repeatable, right? Is it going to be consistent over time? Are you going to be able to trust it? And my answer to that is probably not, right? So yeah, now we have this regular trading hours gap here too. It's now populated on the chart, 50% level. We'll see what DXY wants to do in here. It's been really rapid through London, so definitely going to be cautious. It in itself has a regular trading hours gap that's pretty large, the DXY. So yeah, let's see how this order block is treated in here. See how this fair value gap's treated. See, London's low hasn't quite been tapped into yet. Whoops, let me fix that. So yeah, remember, we still have this daily wick, 50% level. That's a pretty significant, reaction from that wick that we talked about from the previous day. That's what this line is. So let's see what happens if we respond from this wick and we leave that low. Do we have SMT at the lows? Not quite. So yeah, again, we're just sideways, so I'm not necessarily interested. We'll have to just wait and see, like I said. But yeah, if the DXY does want to get up here, this should break down, and then we would look to see how price can get down into this regular trading hours gap. That regular trading hours gap is this here. It's not the whole range, right, which would be this upper portion down to there. It's just that little itty bitty piece in there, right, that's inefficient, that has no trading, no wick, no nothing. So that's super inefficient. So if it does want to get down there, we'll be ready for it. And if not, again, higher time frame narrative is still bullish. The bias may just short term be looking to reach lower, and then once it hits a logical level, may respond and get us back in line. But yeah, good morning, Nico. Good morning, Byron, George, Mike, Tony. Appreciate y'all hopping on as always. So yeah, again, remember, this is not a time to be aggressive. It's just not. I'm almost never aggressive. I'm always very calculated, and I like to wait. Like I said, this fair value gap in here, it's pretty nice. See if it can overtake that. I would have preferred if this was to, maybe set up in here and then rally. I would have much rather preferred it swept below this, but maybe it won't need that. And then we'll have to catch a continuation or try to spot a continuation. And remember, every model that you use, the tactic that you use on that, initial move, if you go through the rest of the price leg, if you're trading a pure ICT model and you don't have all this other stuff mixed in, you'll generally be able to see a continuation. You just have to reset the rules and wait for things to unfold again. That's essentially the continuation logic that I use to be able to get back in. If I miss, say this runs up and starts to move, and we're headed up here, and I'm pretty confident that we're going to get here or maybe even up here, I would just look for my rules to set up again on the 1 minute, on the 30-second chart, and then just find an entry that way. And it's highly effective. You guys have seen all year. So yeah, let's see how this is going to be respected. Is it going to get outside of this? Because I think we still have inefficient price delivery for the regular trading hours gap. It would be inefficient to the sell side. Not so much the buy side, but definitely the sell side. If this candle does overtake this, it may still want to try to come back down into it. And then we got relative equal highs here. So do I have, yeah. So these are also not only on the normal electronic trading, but they're also here on the regular trading hours. It's funny too, because even if this was purged prior to this, if price was still going to be bullish, ICT says that even if it's purged and you see the visual of the highs or lows, that are equal like this on the regular trading hours view, it'll still be used later on potentially, even if it was already taken. It's a special characteristic to the regular trading hours gap identification process and the liquidity that's on that perspective. If you go back and look at some of his videos about this topic, he explicitly mentions that, and I'm sure that went over a lot of people's heads. I know it went over mine the first time, and then I watched it a couple of times back when he first dropped it, and it's definitely something that repeats. So definitely do some back testing on that. So we see that we're failing this now. Again, if DXY does look to try to get up here, we may see it try to, turn this around and then reach for our low resistance sell side liquidity. Why is it low resistance? Because there's a PD array mixed with a failure swing, right? A PD array right below it. It could be equal lows that are sitting below it, but it's significant that you see the failure swing overall, this low and that low. It's obviously not a failure swing here, but we're looking at this from like a larger view, right? Like this. So it may look to try to purge that out. So yeah, I'm just in a mode of waiting, you guys. Not in no rush this morning. And you shouldn't either. So if we move up a little bit, let's go see. So we got this order block here. So we'll see what happens. If price can close below that, we'll see how the reaction will be. If it trades into it and then maybe sets up your model in there, I'd say that that would be a pretty good thing to study. If we can break down below this and then return back into it, you'd want to definitely go in and look at whether a model is showing up. Again, I think that'd be a good study idea in terms of the timing element, especially if it's close to a macro and that type of thing takes place. Given what we have below us, this wouldn't also upset the overall narrative going higher. It would just simply be looking to complete this sell model that's then looking to seek the sell side liquidity down here to potentially pair up smart money buy positions with sell orders right below this low. I mean, you can imagine it would be tricky to people that don't understand things the way that we do, right? Just a normal retail situation. They're probably using trend line. We're retail too, but we just have a different, unique perspective on retail trading. They're probably seeing this trend line. Oh, it's going to respect it. It's going to respect it, guys. So that may be used against them. But, again, I'm personally going to be waiting because we're stuck inside of this right now. Not too sure what that is. But, yeah. So for completeness sake, if we did want to come in here and fill in the entire gap, right? Just have this showing. So we can make some observations. It's a 15-minute fair value gap. So it looks like it's still holding, right? Like I said, there's really nothing in here telling us to buy right now. It looks like it's more so looking to try to take out this low now that things continue to unfold. And then possibly come down here. Like I said, this is inefficient, so it's a pretty solid magnet in price. And unless this was to be violated and price gets above it, I'm not interested yet. Plus, we're in consolidation. It may look to break out of it and reach for the level I just mentioned, these levels down here. You also see the 75% of that overall regular trading hours gap. You see how that is beautifully being respected. Also the 15-minute inversion in here, or reclaimed fair value gap. We can honestly just use this though to keep it clean. So it definitely looks like it's, just hanging around. Very slow Asia, very slow London. So there's really been no manipulation that's taken place. So we may end up getting another London or New York delayed protraction. Well, you could just call it London delayed protraction, where the manipulation takes place here. Maybe this eventually seems to be the manipulation, right? I don't think that's enough, in my opinion. It just looks like all of this could be getting manipulated. I'd like to see if we could get down here and then see if it can reach up and then try to come clean this up. Because again, higher time frames bullish. You know, this is all used to get you fooled, to pull you in on both sides of the market, make you second guess yourself. We don't have no second guessing over here. Okay, it's either going to do this scenario and reach down if it does leave this available and go higher, or it's going to not even reach down there and then go higher. And I'm okay with being wrong if it does look to slide aggressively through it. But even if it does slide aggressively through it, we have an idea, a framework that can get us in line with that if we do end up breaking down in here. We could even use this. If your model's in here somewhere, you could use this as another reinforcement element. The 50% of the regular trading hours gap from the previous day. Is it the previous day? Well, from previous week. Yeah, from previous week from December 22nd. And again, because this is left open, this is a void of liquidity. There's no trading that's happened in there from the perspective of the regular trading hours. And when you go to the electronic trading hours, right, it looks like there's a little bit that went in there, but there's still a small little bit. Price wants to be efficient, okay? And that's not efficient. So it may look to want to reach down there before it looks to continue going higher, eventually to reach for our other inefficient price delivery, which would be this gap up here. It's another moment from the close here to that candle. We got that little gap inside there, and it's inefficient to the buy side here too, right? So that's just part of the context that I've been talking about the last couple of weeks. Aside from the fact that the higher time frame still structurally is bullish, that's what's kind of keeping us in line with that. So yeah, like I said, there could be an assumption. One of my students, Mike, in the chat talked about our flagship model showing up. I do agree. If you did want to kind of be a little bit ballsy, even though it's in consolidation, the idea is still there, right? Right. But my opinion for that would be to simply target down here, like we've been talking about this morning. I'm just not willing to be ballsy today, right? Just like the remainder of the year. I'm going to save a lot of my aggression or just like willful execution ideas, more so for the start of January. Unless, of course, it does, drop down here and then aggressively starts to reprice higher. That'll potentially put me in line with something going to the buy side, especially because that would basically be a low of the week within a Tuesday low of the week profile potentially. But because the FOMC meetings, the FOMC meeting, the minutes meeting is in the PM session, when the news is separate like that and it's outside of my main session, one of my personal rules, doesn't mean you have to follow it, but one of my personal rules that's helped me not deal with a bunch of nonsense for my own trading personally, I basically have just decided to be very cautious around those times. And, sometimes not even take a trade unless my demands are met, right? I can say that if we were to get above this high here, I would classify this wick in here and this stop run as a run on stops and a balanced price range. And then I'd want to see this in here get respected. And then if a model that I'd like to execute shows up off of the heels of that, then that would be the time I would look to get into a buy potentially and kind of disregard this idea. But for now, right, if you had the short idea, like my student Mike mentioned, it definitely unfolded, right? I think this is more so a reliable YouTube model execution rather than the Razor model. It hasn't really, maybe that changes over time, But for now, it looks like the YouTube model was the best idea. Run on stops, shifted market structure, fair value gap, stop above the area up here. Seeing the fact that this model unfolded and we have a pretty logical reasoning to go lower, that may be supporting the razor idea. So it may eventually, like I said, get down to here. I would like to see it get down to there. But if it doesn't, again, our contingency plan would be for price to get up above the high here. And then that would be what triggers in my interest to buy. But for now, there's no buys being considered. It's all pushing price down, possibly to this gap down here, which I've talked about for the last couple of days. I talked about it yesterday too, with my private group. We definitely mentioned this. And we also mentioned the market maker sell model idea ahead of time before we got on YouTube this week. So yeah, the market maker sell model idea, we're inside of the second stage distribution. So again, if it does get down to here, plus the low resistance liquidity down here that's available, would be a reason for this to be pretty quick, right? If it was to try to get down there. We're inside the macro now too, so we'll see if it wants to open up and do that. But yeah, I don't like how this is behaving. I would say that as long as it stays below the 50% of this wick in here, it's still viable to try to get down below to this level. But I'm personally going to be waiting. But there is a justification, an argument for that counter trend move to reach lower. Hopefully you guys understand everything that's been laid out so far. And again, you guys got to make your own decisions, right? Well, hopefully this logic that I've laid out is helping you decide whether this is something you would like to participate in, or if it's something that you think you should be, pulling back on and just relax, and wait. That's the position I'm taking. Right, so yeah. See the chat. Nico said possible buys cooking. Yeah, that's what I'd like to see. Higher time frame still bullish, but I'm not, discounting the likelihood that, it may offer shorts before that, because it may set up the, like you said, the buy a little bit later. Yeah, and the Dow's pretty much doing the same thing that we mentioned earlier as well. As long as it stays above these levels, the more interesting idea, the more, in my opinion, reliable idea is going to be looking for buys. But, you could still kind of see the possible justification for price reaching lower, simply to target levels to set up a further buy. So counter trend idea, if you're not comfortable with that, you should just wait for, the actual move, right? The actual move that we're trying to see, which again, narrative has been decided on being bullish, right? Like I said earlier too, I wanted to see how the response would be once we take out this low. What's the response turning into? Right? It's turning into a turnaround. Okay. So now, like I said, given the fact that we're now, where was that? The wick here. So now that we've gotten above this, we've also gotten above this inversion in here. We may see this act as a pretty reliable displacement running to the buy side. So this will all be looked at as manipulation because nothing happened in London. We manipulated below the lows here. We now got equal highs up here like I've been talking about. Like I said, my main interest is to try to see if we can get up above these highs. It's part of the regular trading hours liquidity too. And now we just simply wait for a model. I personally don't have a model that's shown up yet. None of the four that I like to operate under have shown up here. We had this high to that low. This is the upper portion of that wick. So like I said, this may be something that does lead to the acceleration. And as long as it doesn't get below the 50% level here, on the 5 minute, you see that there's also an order block there too. So yeah, see? Now starting to pick up. Didn't set up any real move unless I was just going to think, oh, it's going higher, so let me just get in. It didn't set up anything for my model. But the initial idea, wanting to see something set up a buy position, us thinking about the logic that would potentially get us to frame a setup going against that, just to simply set up the main objective, which has been buys, has basically came to fruition. Just in this instance, it hasn't really given us much of an entry opportunity. Do you see why I kind of pulled back what my intuition was telling me? Why I kind of didn't take an execution? Why I didn't say, yeah, take a short, guys? Not that you couldn't have taken a short if you were executing the YouTube model, right? The 2022 model, it did set something up here, right? Run on stops, shift, fair value gap, simply targeted this. Ooh, I do see that right there. I guess there was something on this 30-second chart. Let's set up our razor model. I didn't see that. Well, you know, it's how the cookie crumbles sometimes. So I guess there was a mismove in there. Those of you in my private group know about the razor model. You guys can hopefully clearly see it in the chart, right? We took out London's low, and then what transpired as a result of that, you can kind of see it. And now we're using the regular trading hours upper portion. So let's see how that wants to respond in here. Again, this wick in here should be sensitive. It's a discount wick at this point, right? It's the upper portion of the wick, right? We can even measure this out here if you wanted to. So if it stays above that, that's pretty solid. That's all we really would need. Using wicks for entry is a model of entry. If you don't take those entries, though, you definitely want to go ahead and study these types of things before you look to engage. But let's see how sensitive this level will be. See if we can't get that to push us up to the buy side up here. This height of that low should be treated as a balanced price range. So we have up to the 50% level for overall invalidation for the current delivery. And we got that upper portion of the regular trading hours gap. So that should ideally be enough to get us up into this level. And then we'll see how the London high gets treated. If it takes that and then immediately comes back to the middle of this consolidation, I'm completely not interested in doing anything. All right, we're inside of a macro right now, so we should be able to get some big candles as a result. So I'm watching this level here, very much in a position of trying to see if this is trustworthy or not. So this will be able to determine that. And if we stay above this, and we could end up getting a pretty large run potentially up into here. And if it doesn't do it in this session, it'll most likely be waiting. If we stay in consolidation, like for the next hour, I think that it's going to be waiting for the FOMC meeting. DXY is an absolute shit show. It's screaming to you that this is a rattlesnake. So you got to be very, very cautious. Yeah, Nico, I agree. The stop loss would be a little too heavy for my liking. All right, if like something was done there. I guess not really. If you were to use the wick, even like that lower portion of the wick, this needs to hold for this to be a valid run to the buy side, a trustworthy run, right? It's invalidated in terms of this going higher if we were to take out the midpoint here. So you could, the stop is reasonable. It's less than 30 points. But again, if this isn't your model, you're watching, you're studying, you're trying to see what's going on. Yeah, yo, Mark, welcome, brother. But yeah, I've pretty much, in the private group, we've pretty much maybe missed like maybe a handful of days, just going live with you guys. But yeah, it's pretty much been every single day. It's probably been more consistent than most people on YouTube. At least when it comes to like my private group and the attendance, we're literally there all the time. And every week we've been live on YouTube. So yeah, and almost every single live call has had something that's played out, and looks like this is no different, right? Again, I didn't shout out this as something I'm going to take, but we outlined it. I don't put you guys in trades. I outline things and, I try to see if they work. And it looks like this, at least up to this point with this response here, seems to be working. Like I mentioned, it's something we got to be cautious about above this high because we do have the FOMC minutes in the next session. But I think this should be reasonable. I think it should be able to get us up to this high. I don't think that's asking too much. And again, if it takes this high here and then immediately runs lower into the 50%, that'll be a problem. There's your 30 points being offered there. Okay. Again, we pointed this high out and how it should be sensitive well before it even got breached. Because remember, it was that wick. And now the full target's going to be met here. Full target met. Okay. So yeah, that's a nice response. So because it didn't really react too aggressively from this, I think we're still set to possibly even get us up into this level. Small ranges lead to large ranges. So we'll see if that phenomenon takes place here. But nonetheless, this move here, again, we outlined it. Yet another live call with a profitable trade given. This ain't financial advice. I'm not telling you to execute or do anything. If this wasn't something that didn't align with your understanding just yet, if you hang around these live calls, it'll become something you get comfortable with possibly. But, if you did understand it and you chose to execute in your demo, right, you should have been able to see a profitable engagement for your learning. Okay. Such a small range is already gone. Gone daily open, regular trading hours. Yeah, I don't think you want to look at things that way. Because of it being December, that may be part of the reason why the ranges don't have much follow through. So that's a risk. That's why if this was something I or you guys participated in whatever capacity you participated in it with, I would have taken profit here. Right? Again, even if you took it here, right at the upper portion, didn't feel confident or comfortable waiting for it to get to the 50%. Again, this was a reasonable risk parameter here. From this entry, definitely from this entry, remember our max is 30 points if we're going to use normal leverage. And, whether you chose to execute either of these, it would have afforded you the risk protocols that are okay with a normal risk, right? And risk protocols in terms of like the amount of points, right? If it's beyond 30 points and you have to do like 35 or 40 points, you simply just have to cut your risk. If you believe in the idea and you want to make sure that, of course, you're getting at least 1-to-1, okay? Or at least trying to identify that. Okay? So yeah, what a way to end the year, right? Like literally, I've been live so constant all year. Pretty much all the live calls, except maybe a handful of them that, we had a nasty price delivery in. Aside from that handful, pretty much most of the live calls, we've been able to point something out that has the possibility of, being successful. I don't think most people on the internet can be saying that about their community and them coming out and showing themselves live consistently on a regular basis, pointing things out that are potentially profitable, either to your learning or just in general, So I don't think most people are doing this, okay? And you guys could be the judge of that. I don't really watch anybody on YouTube except my students. Those of them that set up videos and channels or, outside of ICT. But he doesn't go live every day. He never goes live anymore. And he only did it for a small amount of time. Mark said, not a bad year of results considering how much NQ was held back. Yeah, oh, Mark, by the way, brother, if you get a chance, or if you're free today, let me know so we can hop on Zoom, so we can talk about some of the those things. I want to have it done by March. I would prefer to have you do it, right? And we can get into discussions about details about that. I want to definitely make it worth your time. And you're part of the private group, and you're a savage, right? You're free. Okay, yeah. Today will be the day then. I just have to go see my daughter for a little bit, and then we can get into discussions about that maybe after around. You're on Pacific time, so around probably 4 p.m. Maybe sooner. If I get back sooner, I'll let you know. But we could just hop on Zoom and I can get you all the details. But yeah, I appreciate you being willing to build this for us in the private group. You're a savage, okay? Savage programmer, so much rather use you, right? Not use you, right? It's a bad way to put it. But have you be the creator of it, right? So yeah, what a turn. Yeah, see, I told you guys we got to be very cautious about this up here because the FOMC meetings is later. And that would have been the deciding factor essentially with how successful this trade would have been, right? Whether you would have felt comfortable understanding the condition. It's December. It's the one of the last days of the year. It's the start of the next quarter, right? It's FOMC meeting is later, right? The bonds and yields are kind of wonky right now. They're not really being too supportive. And the DXY looks like a mess. All these things go completely against you, okay? They go completely against your ability to have a high probability, easy to trade environment. We basically pointed this out, and I'd say that was pretty high probability given the response off of this and our expectation that this was going to be sensitive. And then, of course, just simply targeting the low-hanging fruit objective. The first and second targets were met. We called this as a potential idea or sensitive level well before it even manifested, right? I talked about how this was probably not the best idea to really try to push a short in. But if you did push a short and you were getting ballsy, you'd want to be looking at this as a counter trend move to just simply set up another move like this. So basically every conceptual, contextual idea that we've talked about this morning has proven valid. And again, we've done this pretty much all year. And again, I don't think that there's many people that are doing things like this. From the intuition, being able to pick and choose what portions of price are worthy of thinking about executing, to identifying the overall move, to laying out the context to why something should do something or why not, to laying out the validation levels, right? Remember, I mentioned the validation level here, right? I said that if it was to blow past this, I'm not interested in seeing it go higher anymore. It may look to use the run up, break down below this to then try to reach down for the secondary level down here that we were mentioning, right? I didn't know you had a family. Honestly, that's impressive being consistent. Yeah. Kind of a dysfunctional family, but all of our families can be dysfunctional at times, right? Nico said, I appreciate you saying that, Chris. Call Nico my name, right? I appreciate you, Nico. Everyone go follow Nico, by the way. He's one of my students that has a YouTube channel. It's definitely someone worth watching his journey, you know what I mean? Because he's becoming a savage like, most people in the private group are. Mike says, consistent. Yeah, hasn't it been fascinating? Mike, you started with me this year. You started with me on YouTube, then you came to the private group. You saw that I did it twice a week here, but you see that I show up every day pretty much in the private group. And there's something like this forming every day. Do we execute every single day? No. Did I execute this today? No. Right? I didn't, feel inclined to do so. But I pointed it out. It was there. I'm really, ending the year on a okay, let's relax type of vibe. I pushed it aggressively last year, and I just, I'll save the stresses and stuff that comes with trading probably for next year. But this was definitely something I almost clicked the button on. Trust and believe that. And clearly everything has unfolded the way that we wanted it to. So And yeah, I appreciate all of you guys. Just want to mention this. I appreciate all of you guys that have supported the channel, even though the channel's not huge, even though I'm not a mentor that's going to, you know, try to excite you all the time by getting you into trades and doing all the stuff that most of these influencers do. And those of you that have seen through the need for that and are focused on what I'm saying and how it can help you, and then you go and apply it, you guys have all seen the transformation that happens in the way that you view the market. And it hasn't taken you guys 3 years. It hasn't taken you guys 5 years. Some of you guys, it hasn't even taken you one full entire year. Just simply hopping on these calls for, the last couple of months, at least give yourself 6 months. Give the content at least, 3 to 6 months. And, it's just undeniable. You see the rapid changes. And who just, Lana? Lane? Probably butchering her name. But appreciate the subscription to the channel. Hope to see you more. But yeah, this year's been pretty spectacular. I did choose to be a lot more consistent on YouTube this year. And I'm glad I did, because if I didn't, the impact wouldn't have been felt in many of your guys' trading. I wouldn't have some of the very admirable success stories that I've gotten from students like Mike, for example, and like a handful of others. It's been definitely a blessing to see, yet again, what we do here being effective in other people outside of me. Yes, it's ICT Concepts. No, I don't remake things and rename them and, try to build my brand that way. But we do have a unique, I guess a way you can describe it is like a recipe. It's a unique recipe in how we fit together ICT's concepts as an ICT purist, because I don't use anything else. I use 0 other concepts. If you're here listening to me explain things, it's all stuff that ICT created. But like he always says, and he's made it a real serious point, to mention this, but like he says all the time and has said for years, from the time he started teaching, he's laying out a big arsenal of weapons, okay? A big arsenal of different conditions, how price operates, expectations you should have, different components to this big machine we call ICT. And he allows you to pick and choose which elements will fit you, which things make sense to you, okay? And I personally took it upon myself to see things from that perspective, and I push everyone that learns from me to also have that same view. And I created my own recipe, right? From, news fundamentals to the way that we execute and the models I decide to use. I don't use everything. I only use what works for me. And it's a large library of stuff, right? Because I've spent years and years and years every single day studying his concepts and, just being immersed in it. So I've, figured out what works for me. And I try to help you guys figure out what works for you as well. I always encourage you guys to still, if you hear something that I say, go and look at what ICT said about it after or first, and then come back over here, and I can act as like a gluing element, a gluing agent, to make it so things make sense, to make it so, you can understand what's going to work for you, where everything fits in your analysis, how you can go about using things, and also how to, go in and study certain things so it can make more sense to you in a faster way. And, there are ways to make your journey to knowing like what's important and where everything fits. There's a way to speed that process up, right? And how to use certain things. The one thing, there's no speeding up. The one thing that you can't speed up is the experience element, the trust that I have in something like this, right? All the different components that I mentioned, yeah, conceptually it may make sense. But how do you get to trust something like that? That hopping on these calls is one way you can start helping yourself trust it, seeing it over and over and over and over. Or in my private group, seeing it every single day, constantly, never really changing. That's one way, right, to add to the bank of trust within you as the trader. But more importantly, it's going to be you taking what you learn and going into the market and spending the time that is required, right? There's no, well, maybe someone can make an indicator. I'm looking to make an indicator for one of the models I use. Um, and my students are going to have access to that, but that's only going to go so far. You still have to build the trust and be discretionary with it. And that only comes from experience. There's no replacement for experience. Tools can help you kind of artificially build the trust, but even a tool can't instill trust in you, right? When it comes to these concepts, it's just like a relationship, right? If you don't spend time in a relationship, time to get to know somebody, and put the effort in and the time that's required to build that trust on your end, you're not going to trust the person, you know. So every piece to the puzzle that you're learning here, and when you're watching ICT's concepts, um, all of it requires trust to be built, especially if it's like higher time frame analysis processes, like the stuff that we talk about on Sundays. It takes a lot of time to build that, just like how it takes a lot of time to build trust with a individual you're trying to be serious with, right? Or even like a friendship, you know what I mean? You don't just go, unless you just go and trust everybody just because, which I don't encourage you to do. If you're new here, don't trust me right away. I don't want you guys to just take my word for things. Like I say that, I'm consistent, I'm doing these things live every week, and, we, rarely don't know where price is going to go. I talk about these concepts and my view on them and how they should be used. Don't just take it at face value. Continue to come on here and apply things yourself relative to, some of the things you hear me discuss. Figure it out on your own in terms of whether you should be able to trust me or not. I don't encourage you to take anyone's advice, although, students here see that my approach to teaching is this way. And so anyone that gives me, I guess, a testimonial, they've spent time. It's not like they just joined for a week and then, okay, they're claiming that I'm trustworthy. I don't encourage you guys to just take things at face value. I want to earn the trust. That's why I'm on YouTube so much this year, because I want to not only help people, but I know that it takes a lot to trust people. Okay. And I encourage you to keep that perspective. Be skeptical about everything. I was burned so badly for thousands of dollars because I just blindly trusted somebody. But then again, if I didn't blindly trust people at the beginning, I really wouldn't have probably started trading. Right. So for some people, it may be a double-edged sword. But for most people, you're gonna want to vet the people that you're trying to trust. Okay, and if they don't, at a minimum, come out here and do this type of stuff, we do see that it kind of turned around here. But if they don't even come out here and show you this type of stuff, point to something before it happens, they just like take hindsight and do this and do that. Why waste your time with that? Why waste your time with someone? Like, would you want a doctor that's never, or like a surgeon that's never done surgery, but just says that they do surgery and just like hypothetically talk about things? I wouldn't. I'd be like, dude, can this guy get arrested already? Like, if there's no proof, like, where does the trust come from? Right? Like who's to say these people are worth listening to? And it's sad because most people on YouTube, most of these mentors, unless they do something like this, they're literally just hindsight. Anybody could come on to hindsight, learn all the terminology from ICT or anything else, and come out and make it seem like they're smart and more versed than they really are. But in trading, it's like it's life and death when it comes to who you're listening to, because that's going directly into your mindset. It's going directly into what you know about the markets, and then it'll bleed into your execution. And if it doesn't work, you'll quickly find out that it doesn't work, and it's painful when you could have just did it right the first time. And just realize that this industry is, it's filled with good people, but it's filled with a lot of bad people. It's filled with good opportunity, but there's also the opportunity to blow everything and really damage yourself mentally. So again, it's important not only for you financially to make sure you know who you're listening to is worth it, but it's also very important to vet them because of your mindset. Because if you just get strung along for months, years, and then come to find out that that person's full of shit and it doesn't work and you just wasted all this time, you're probably more likely to quit. You probably won't reach the goal that you're trying to reach to, you know, and it's unfortunate. You know, luckily I was able to change course very early in my trading, like literally within like 6 months. I was strung on for like 6 months, or maybe it was 8 months. And then ICT was introduced to me. And I'm not sure if my friend Byron's here, but it's because of him that I went to ICT Concepts and figured out like, oh, okay, these people that are talking smart money and all these concepts, they're not really the creator of it, although they acted like they were, right? I found out it was ICT. And then from that point on, it was history, you know? So it's just a good example of making sure that you know who you're listening to. And if you have people that are trying to help guide you to the right information, you know, don't discount it. And again, especially if they could prove that what they're doing works, which I do every single day. And you know, I'm not the only one. Obviously, there's a good amount of people now that have come out publicly this year. You know, but if you see people that are actually honest and provably consistent, right, can prove to you that what they do works, definitely support them. You know, even if their followings are small, because the industry needs more of those people. And who knows, maybe some of you guys will end up being one of those voices. You know, there's a lot of idiots on social media, and part of my mission here on social media is to try to do my part to intercept that type of nonsense so people don't get hurt as much, because I love trading. Trading is literally my life. And for many of you guys, it probably will become that as well, if it's not already. You know, so, you know, if we have something positive to push into the industry, I think it's worth it. And if there's someone that you can support that's doing that, maybe you don't plan on, you know, going public or doing these types of things, there's nothing wrong with that. But, you know, it's good to support those that you see are honest, that are proving it, that do sincerely care about your success and other people's success, that aren't like egotistical, you know, that aren't trying to shove MetaTrader 4 down your throat. Hey, look at what I made here. Look what I made here. Right? First of all, that's illegal for them to be doing that type of stuff, because it's inadvertently coercing people into trading live, or it's selling them this false expectation that, oh, if you just follow me, this is what you can have. I didn't, you know, early on, I didn't know that was illegal, but you guys probably wonder why I don't do the same stuff that all these other people do. For one, it's illegal. Second, I know it doesn't help you, and it'll make you think irrationally, and it'll make you not appreciate the small gains that you do make. You know, if you've never made $1 and you're able to make $50, even though it's not something that's going to help you quit your job, that's $50 more than you had before. And all you had to do was use this skill set, which over time won't take you that long. You don't have to trade 10 hours a day. You know, if you study that long, that's, you know, it's encouraged, right? Study as much as you can. But you want to be able to, you want to be excited about those small wins, you know, and your sphere of influence is going to have an impact on whether you're able to appreciate the small steps forward or not. You know, and a lot of times, again, that's one of those things that can determine whether you stick around long enough to get to that larger level. You know, because, you know, a lot of failure has come from people just not sticking around long enough, you know, let alone learning from Joe Schmo on the internet that rents foreign cars and shoves MT4 down your throat, you know. So yeah, let me go look at the chat real quick. DXY's not letting Nasdaq. Yeah, DXY is definitely pushing. So yeah, we do see how things have turned. Remember what I said, this invalidation level, if it was taken out, that may be a catalyst to send price a little bit deeper and maybe hit our secondary level down here, right? So just because we got up into here doesn't mean that this level turned off. It's still an up wick, 50% level that needed to hold if it was going to continue to support even deeper price level delivery. But you can also see the characteristic that I have highlighted the last couple of days, or just like the last couple of months since November, the characteristic of a lack of follow through, we get these big jumps that then just instantly turn around, right? Offer a decent amount, right? But then it completely turns around. The deciding factor in this execution here, this idea that I shared, the deciding factor on whether this would have been profitable for you or not is directly correlated to whether you accept, like I said a second ago, the small wins. If you would have demanded, I need 100 points because it's, Christmas and New Year's and, whatever else you may have convinced yourself of that demands the 100+ point moves. If you were stuck in that mindset, you would have literally came back to either break even when you could have been profitable and taken the minimum, 20 to 30, offered 40, or if you would have taken a loss, which if this runs 40 points, there's no reason for you to take a loss in that instance. You should be at break even. But ideally, because of the condition, the scenario that we've painted and made you guys aware of, as far as like what's to be expected condition-wise, because of that, you should have been able to, justify it to yourself that the minimums are totally fine. You could scale 20 to 30 points. That $300 to $30, whatever the amount is, that profitable live traders could engage. No matter what the amount is, it could be scaled. It could go from 30 to 3,000. It can go from 30 to 30,000 within that same initial price swing. So people that talk crap about 20 to 30 points are idiots because they're not thinking about, first of all, compounding. If you can compound this over and over, it's pretty nice. And very, very low effort. What was that, like 10 minutes, 5 minutes? From this here, or let's be a little bit reasonable, right? Let's say that you didn't want to wait for it to go deeper into it. You just waited till it tapped into this, and then you got it to rally up. Why did it just lock it? So it took about 15 minutes to get up there. Okay, 15 to 20 minutes. Right? I mean, that's a little bit of work, right? For something that can get you any of the numbers that I just mentioned to you, right? Obviously, it depends on your skill set and whether you trade live or not, which I don't encourage any of you guys to do because I'm not a financial advisor. But at the same time, you can kind of see how things, you can see the opportunity that's available to you, to everybody, And it doesn't take that long, doesn't take that much effort. A lot of the effort comes from the planning and then the management of the trade, okay? And the more wisdom you get, the better, right? Yeah, Nick, next year, I'm personally taking a different approach. 20, 30 points a trade. Don't care if it runs 100 points. Scalping is, where's that? Yeah, it's definitely one way to look at it. I mean, you guys know, you guys in my private group, sometimes I allow it to run beyond, 30 to 50 points, but generally I cut it off around 50 points. Most of the time it's like 30 to 40, right? Of course, that's an area where, I'm at a stage where that's a situation where I'm considering expanding, considering the fact that almost all the trades that I call out run beyond 50 points, which again is recorded live in my private group every single day. It doesn't happen every day, right? 20 to 30 happens pretty much every day, even if price, does something like this and turns around eventually, which again, we kind of expected this possibly to do so, right? We said we wanted to watch this. But 20 to 30 points is absolutely something that I preach nonstop over and over and over because it's scalable, especially with someone that's trying to just become profitable. What's easier? What takes less effort? 20 to 30 points, that's unlimited scalability, or capturing 100-point moves, especially if we have, not enough experience navigating these larger moves and spotting when those things occur, right? Which one's easier, right? 100+ point moves for a new trader that, hasn't, successfully shown consistency in 20 to 30, right? Let alone higher time frame analysis, or the person that's taking 20 to 30 point base hits. and give or take, a little bit more, but never any less than 20 to 30. Because then, if you think about it from like a real world situation, you got to cover costs and commissions, right? If you're trading like a real account, like I have a personal account plus a couple funded accounts. So it's like, if I'm taking on my personal account less than 20 points, I mean, it's doable, but it's squeezing the margins a little bit. And why? Why have less than that? Some of you guys, it may take that. It may require that, right? You may be required to take, those smaller runs, just so you can get confident. Take it and then watch it run, and then build confidence through that process of executing, taking profits at a really short amount, bagging that profitable win, and then watching your skill set develop over time and seeing if you can, in fact, trust yourself. One key thing that'll absolutely crush your ability to trust yourself, crush your ability to hold trades or even feel confident in holding trades, is you telling yourself to do something and you never follow through with it. If you guys say, I'm going to do this, I'm going to do that, and then immediately the next day you don't do it, and then you do that over and over, money's not the only thing that compounds. Things that you allow into your mindset, your actions over time, that affects you in a certain type of way, and that compounds. And if you can't trust yourself because you tell yourself to do something and you just continuously do it, it's no wonder we cannot trust ourselves when we're in a trade, or we can't trust it to run, or trust ourselves to hold trades, because we've let ourselves down subconsciously over and over. And we don't want to generally look at it like that. Like, in the moment, we don't look at it that way. But in reality, let's take a, 3,000 foot overview and look at the situation. That's exactly what we're doing, right? We're saying, oh yeah, this is my rules. This is my plan. This is what I'm going to do. And then over and over, we break it. Then we justify, oh, well, like with whatever justification you want to use, right? Oh, well, this or that happened, so this is why I broke the rules. No, there's no reason to break the rules, right? If you're on the road and there's laws that are in place, are you just going to, slightly bend the rules a little bit, risking a ticket? Some people might. But the same people that would break their rules in trading are the same people that do that type of stuff all throughout their life. In trading, you got to be very rigid. When you get more experience, more wisdom, more understanding of what's going on, and you build, more of a depth to your skill set over time, you could consider kind of bending the rules a little bit, here and there when the situation kind of makes sense, right? But for the most part, as you're building the skill set as a new trader, as a trader that is still trying to gain profitability, any of the levels, you want to make sure that you are very serious about this. My trading didn't change until I made this adjustment in my own life, let alone in my own trading. I didn't realize how many times I would let myself down in my real life. I would say, oh, I'm not going to do this, but then I'd continue to do it. Bad habits, whatever the case may be. And I would promise myself that I wouldn't do it. And I would do it over and over. So it's no wonder I was not confident. It's no wonder I wasn't confident in my trading, right? The way you live your life has an impact. The self-image that you build through day-to-day life will dramatically impact you in trading. And then, of course, everything that you do on a day-to-day basis in your trading obviously will have a compounded long-term effect as far as, who you are as the trader and whether you can trust yourself or not. Think about it. If you're breaking promises to yourself and you're in a trade and you just don't seem to trust it, or you get out early, or, whatever the case may be, but you're breaking the rules all the time, isn't it justifiable that you don't trust yourself if that's what's going on? Just think about it rationally for a second. Isn't it justifiable to have that fear that students have if this is what's present in their performance? If this is what they're allowing to have happen? Right? I didn't think about this stuff this way or frame it in this way, personally, until I spent a long time dissecting my mindset, my habits, my thinking, I've read a lot of personal development books, right? I've talked to, a couple friends that are, studying psychology. I've talked to friends that I've met on social media that specifically focus on, like trading psychology stuff. I've even used Chat GPT. Well, I used it, but I was already kind of at this point. But, I had a friend that sent me something in Chat GPT that kind of acts as a mirror, right? As a psychologist to help you kind of pull this out, right? And see these hidden things that we try to silence that are dramatically impacting our ability to trust ourselves, that are dramatically impacting our ability to improve, right? It's not all just technicals. You can know every technical ICT concept in the whole world, right? All of his library. You can even buy his books and all the stuff that he apparently is going to come out with. And you could dive into all of that and be a library of information, but still fail and still not be trusting your model. When in reality, it's not you not trusting your model, it's you not trusting you, because you can't follow the rules and promises that you give to yourself. This is a much larger thing than people realize. Like, this is present in most people's performance, and they think it's the model. It's diverted to something else technically. When a lot of times, a lot of traders that have been studying these concepts for 2 or 3 years, you at this moment have enough information. You don't have to learn another concept, right? If you can answer, where price is going, risk management, validation, invalidation, how to target liquidity, understanding order flow, right? And a handful of other things. If you can understand these things and you're still having these specific problems with trust, a lot of times it's going to come back to your mentality, the things that or the actions that you're allowing yourself to take that are not aligned with the trader that you're trying to be, not aligned with a mindset that profitable traders have. They have to trust themselves. You have to trust yourself. And you can start working on that ability to trust yourself by simply giving yourself little promises every day, keeping your promises to yourself into a habit in real life. And then that, also should be intentionally done in your trading as well. No matter how much of a fight is going on, okay, in your mind, like, oh, well, what if this, what if that, like, if I follow this rule here, it's going to stop this, or whatever the argument is. Who cares? The rules are there for a reason, right? They're there to protect you, protect your mental capital, to protect your actual capital, to protect your funded accounts. So if you're not following them, you just allow yourself to break the rules just because whatever thing in the moment is persuading you to go outside the rules you made for yourself, that you may have sat for hours plotting and scheming, right, to put them in your plan. If you just keep breaking them, it's going to keep being a problem. So again, going into 2026, I want you guys to really think about this. I want you guys to think about some of the stuff we've talked about this month, in the Sunday calls. I've used them as I do every year to try to get you guys prepared, get you guys some of your guys' focus aligned properly, right? Both technically and then with what I'm saying here has to do with psychological. How to build trust. What's probably stopping a lot of people from trusting themselves? It has to do with breaking promises to yourself most of the time. I can tell you almost every student that's come to me on a one-on-one basis has had this problem, right? I've helped a lot of students, right? And it's something that's very, very, very common. Not in everybody, but it's definitely something that's very common. The psychological elements, right? Or maybe they were pulled towards ICT's concepts, but someone was teaching it a totally wrong way, teaching it in their own way, which is just adding things that are unnecessary, renaming things, and all this other nonsense, right? So yeah, hopefully you guys go ahead and do that. Like, think about this type of stuff going into next year. I would love to hear any of your guys' journey if you guys do apply this type of stuff. If you guys are going to make it a point to do things differently next year, and you do watch my content and you have gotten value, and it has helped you improve a little bit or a lot of it, I'm definitely always interested in being updated, even if you're not in the private group. 100% if you guys are in the private group, what are you doing if you're in the private group not sending me messages? Pretty much all of you guys are, though. So it's not anyone in particular in the private group. You guys are really good at that. But yeah, I'm always interested in seeing progression. Let me see, did I miss any questions? There are ICT traders who are millionaires and haven't gone public. Yeah, I know 2 of them that aren't public. But yeah, well, they have a social media, so that they're not like in the public eye dramatically, you know. But they do have a social media. Not many followers. They don't really post a lot, but who doesn't have a social media these days? At least set up, right? Pretty much everyone does. Some people don't, but yeah. So again, getting back to the chart here, price did breach the level that we talked about. That would be the invalidation. Isn't it ironic how it's also being sensitive here too, but the opposite way? So that up wick that should acted as a bullish PD array a bullish PD array to push price higher and act as support, turned around and essentially inverted. Just goes back to what ICT has mentioned, what I've mentioned, that every single PD array that you look at, that you learn, that ICT teaches, they all have an inversion element to them. All right. So, and wicks are no different, So again, this is something you want to definitely study. You want to go in there and study the inversion behavior. Yeah, 2026 is about to be insane. This year was the most accurate year. The year before that, 2024 was the most accurate year for that year. And the year before that was the most accurate year before that year. So it's just going to keep compounding. And I hope that it's going to be the same for all of you guys, especially those of you that, just started with me, or that, those of you that are in the future that are going to start, being part of this community. I think that, the one guarantee, like I always say, that you will get from this channel, from the content that I provide, from my private group, whatever capacity you choose to engage the community on, one guarantee is clarity. I can guarantee that you will find ways to get clarity, where price is going to go, why it should go there, whether it should hold, is it trustworthy or not. But the rest of the walk to wherever you're trying to go is going to be solo. That's why I don't, promote, get in the trade here, get in the trade there. That's like debilitating you. I do things like this. Technically, you can classify this as a signal, right? I pointed to a level. I said it's probably going to be reactive, something to study, something to watch, right? This is a target. This may be a secondary target. We talked about the response up here, how if it breaks down, it may break down because of the current environment. There may not be much follow through. That expectation came to fruition. It went pretty aggressive through it, but we ended up turning around, broke down through this level. So, we've basically framed all of that out, and you do what you will with that information. When I do this type of stuff. But more importantly, I want you guys to always focus on learning. Okay, why is this guy saying what he's saying? And then watch a bunch of live calls with me and see if it's trustworthy. I literally have an archive now of the whole entire year of this year. Every single week we hop on. Every single week we have a Sunday call where I believe price is going to go. Pretty much every week, aside from two or three of them, went right to where we were looking for it to go to. And that's aside from the live calls like this, which yet again unfolded exactly to a level that we identified. We had to wait a little bit. We painted out the possibility of the counter idea, right? I talked about why I didn't trust this, why I didn't feel inclined to take an execution, aside from the fact that I'm using the rest of the year to be calm going into January. But you can kind of see the expectation or the anticipation that this may be a bit sketch. You'd have to really get ballsy to take this trade, right? It kind of proves why I mentioned it in the context that I did. You could see how it unfolded, right? And now that, of course, we got down below this level here, we've kind of inverted this level here, which is I believe a 15-minute. I like that, actually. Now that we're kind of below this 15-minute inversion here, I would definitely keep my eyes and attention. Let's see where yeah, look at DXY went right to where I said it would potentially go. Remember, we said, how is it going to deliver when it gets into that, right? Is it going to react aggressively away, or are we going to smash through, right? And then again, we had this high. Yeah, this this candle here, 50% of that candle. So ironically, that's aligned with the monthly equilibrium too. So we can keep that there as well for validation. But yeah, as long as it stays below this level, we still have, highs taken, lows taken. From this low to that high, we had a dealing range, but now this high took this low took this one. This is now our new dealing range, okay? So we still have this range that's still valid, that price is working within, right? So we still got to watch and see. We're now at a premium though, right? So again, that's another reason why we don't want to see it go too much deeper. We don't want a deep premium, right? It could be in a deep premium, but it's getting more risky that it may blow the high out here. Closing above this level here, so 50% of the 2-day order block. We also have this weekly order block here too. So we definitely want to keep tabs on that as well. Let me measure this out. Yeah, so that's the weekly wick midpoint. It's not being as sensitive as I would have wanted it to be if we were going to continue to go lower, but it's still perfectly acceptable that price tries to run up a little bit. We don't want to see it just expand and accelerate aggressively. You could see that that's kind of what the vibe is at the moment, at least when we get down to these lower charts. So we may see that start to manifest up into the higher time frames, but we're just going to have to obviously wait and see. Continue to monitor how this is going to deliver, right? And then how today closes is going to determine whether tomorrow and the rest of the week is going to be aimed at these highs up here. And if that is, we'll end up seeing a deeper decline here. You see how everything's turning down kind of lockstep following this. We could see that it's having an impact here as well. And if we go back to the 15-minute fair value gap I pointed out for you guys, right? I mentioned that if this invalidation level gets purged, it may be something that sets up the catalyst to go and try to then target our, previous target going to the downside, right? Why is there a gap there? Is there a gap? Why is there a gap there? That's strange. Okay, TradingView, which one is it? Is there a gap or is there not a gap? Can you guys check on your chart and tell me if there's a gap right there? Around the 7:11 a.m. Pacific Standard Time. I don't know. I don't know if it's actually there. I don't think I didn't. Did I not see it earlier? I don't think I saw that there earlier. Why is it there? Yeah, let me know on your guys' chart. No gap. Okay, well, what a mess. What's up, TradingView? CME, what the hell y'all doing? Trying to play with me, bro. I got no gap. All right, well, I guess I'll just trust this one then. Remember, we still have this low here. So it's definitely a nasty mess, price delivery wise. And we'll see what happens in the next 10 minutes. You know, we pretty much called that initial move higher. Seems like this was the manipulation. It went higher and then it started going lower. If DXY keeps up with this rampage, which again, we're just going to have to continue to monitor. We don't know yet. We don't know if this is going to react here aggressively. Still a bearish trend. Structurally, nothing's changed. Just simply looks like we're taking stops back to inefficiencies, right? Discount to premium, and then possibly going to tip over and go back down to discount again, targeting previous week's low. Let's see, let me look at the chat. How do you overcome the need of speeding things up in trading, wanting to do more? So you got to just think of like the compounding idea. Trading has never been realistically a tool where people should be thinking, I'm going to get rich tomorrow, or I'm going to quit my job in a week, in a year. We're going up against people that have been in the industry for literally decades. And, you know, investing itself is a long-term thing, unless it's gambling, right? Anyone could gamble, right? Some people get lucky and then, you know, invest in things early and, you know, get rich that way. Or some people will get lucky on one trade and then make a ton of money by over leveraging and over trading. That's not sustainable as a career. A one-off, yeah, of course. But this is a business, right? And it's the same thing with like a normal business. We may want more profits, right? But businesses have a long-term outlook. They don't have like a year, 2 or 3. It's like, I'm going to have a dynasty that I'm going to be able to leave behind to my family. And, you know, anything meaningful really doesn't come super quick. And we got to think of this from a long-term perspective. Like, okay, I'm going to be here in a year from now, 2 years from now. So, and of course, the idea of speeding things up is used against us on top of everything else. So one way that you can also combat the need to speed things up is the simple fact that that thought process is directly coded into the algorithm that runs price. They know that's what people want to think. They know. That's why price does what it does in many ways. So because we know that's what the enemy's trying to weaponize against us, we have to just think of things from a different, more reasonable perspective, right? And the less you worry about things speeding up, the faster things will become, which is it's super weird. And like same thing with like the more that you focus on process and trading well, the more money will magically flow into your account through trading well, right? It's kind of like a byproduct. And again, the speed will come from the size of your account. So like the better your skill set gets, the more capital you have, like the more consistent you can be, the more risk, the more of a risk professional you become, the faster things will speed up. And it's never been realistic for someone to have like these massive gains in just a year. Investing again it's a long-term thing. You know, short-term investing, you know, some people get lucky. Some people come right out the gates and hit the ground running. But for most people, it takes at least, you know, you want to at least think about a 3-year time horizon, at least. Nobody likes to hear that if, you know, it doesn't happen for everybody. I mean, I have a student named Harley who learned from me I think it was 3 months into his journey, and it's been less than 3 years and he's already one of the best students. You know, he's pulling out withdrawals, constantly passing funded accounts, constantly just smacking the market around. You know, I've been trading for 6 years. You know, it took me literally about two years and, like 3/4 of another year. So almost 3 years to become profitable, right? Um, I mean, I felt like that was a long time, right? In some people's eyes, it is. But now that I have more wisdom and understanding and um, like a more of a realistic approach and view, more of a matured approach and view to trading, I see that 3 years was really nothing. I see that 6 years can also be argued as very small. The amount of precision and consistency that is showcased obviously looks like we've been doing this for 30 years. Well, maybe not 30 years because that's ICT, right? We're in no way ICT, but I think we do pretty well, you know. But again, the whole speeding things up argument, some people it'll work for, some people will be, really quick with it, some people won't. You just have to remember that you need to focus in on what you're doing, be satisfied with your journey, the accomplishments that you're able to make, because no one's journey is the same. It's super unique, and we want to make sure that we never lose sight of that, the uniqueness of the market, and how that uniqueness is something to appreciate. That includes how long it takes you to become profitable, right? That includes how long it takes you to understand what it is that you're doing, So remember that that's a weapon that's used against us, the needing to speed things up. The speed will come from a bigger account. Okay, so just keep your focus on trading well, keep your focus on following the rules, being disciplined, managing risk properly, okay, and then gaining the capital that can make that newfound skill set mean so much more. The same thing's true with the speed when it comes to the whole compounding conversation, right? Warren Buffett has said it takes the longest time to get to your first 100,000. But then once you hit your first 100,000 in the realm of compounding, things start to rapidly increase dramatically. And you'll make that same 100,000 in probably half the time, or way less than half the time that it took for you to make that 100,000 initially. That's the dynamics behind compounding. That same argument can be made for your learning, right? That same argument can be made for your skill set as you learn, right? Because once you learn what's going on, many times it's exponential growth, because it's just like compounding, just like what I mentioned right now about Warren Buffett and his view on compounding, right? The first initial phase is always going to be the hardest and take the longest. And if you look at it from a realm of like the trading skill set, it's going to take the longest to learn the skill, where everything fits, learn the market on top of that, right? It's going to take time to understand risk management. It's going to take time to learn yourself, what you have to do to fix the issues that you have that may be holding you back. But once you have, the experience of doing that and experience in the market, and you feel like you arrive at a level where, you feel consistent, all you need is more money. Once you're able to have access to that money now, things become exponential, and you do get there quicker. But the whole compounding science, right, the science behind compounding, that's a way that you can somewhat, silence the speed element, right, or the speed expectation. And just remember, most people, 95%, maybe 99% of people, will never learn this in a very fast, like dramatically fast, a dramatically fast result, right? In a dramatically fast way. Some people will, right? You guys see some of them in the private group. Mike, you're part of the private group. You see it. Someone's doing something pretty amazing every day. Some people have more experience, some people have less. But again, it's unique to everyone. So appreciate it where you're at. Appreciate what your experience looks like. Appreciate the things that you've been able to accomplish. Because you've learned a lot this year, very rapidly, within a year. It hasn't even been a full year that we've known each other. You started here on YouTube, and then now you're in the private group. And it's just been rapid, and it's going to keep compounding and keep rapidly increasing as long as you continue to have the right mindset, as long as you continue to focus on the right things, Okay. Wow, it turned around, huh? Interesting. And you keep your foot on the gas pedal. You're going to get to the point where you're not going to need to learn much more. It's going to be more of a refinement. Okay. And if the process, the WMG clarity framework that I discuss every week and teach you guys in the private group, okay, and a good amount is taught here on YouTube as well. But if a lot of the stuff that we talk about here on a regular basis makes sense, and you understand why these elements are important, and all the different components that I highlight, if you can have an answer to them in the trading plan development section, right? I have that for you guys in the free Discord as well to go check out. But if you can have a process to all that stuff, it's more than likely that you don't need to learn more stuff. You just have to continue to build experience and refine what it is that you already have, right? And the whole getting into trades, staying in trades, holding for longer, spotting the ideas accurately, trusting the ideas, a lot of that stuff comes from experience, and that specific gray area is different for everybody. That's a gray area with every single student. That's not like a default thing that's placed with every student that comes in. That's why you don't hear me say, "Oh yeah, 6 months. It'll take 1 year. You'll be able to use this stuff and be profitable." Right? Or I never say that anyway because I can't guarantee profitability. But there's no time limit that can be universally spread to everybody simply because our makeup as human beings are different. But the technical aspects of things, I hope that I've been able to show you guys that, yeah, you can speed that understanding up, right? You can speed up the process of understanding the system, right? What are the different components that belong in your trading plan? And that you can be rest assured that it's a complete trading plan. You don't need to think about really adding much more, right? That's something that you can speed up. Just you got to get to the heart of the matter. At least me as a mentor, I've learned that if you just get to the heart of the matter and show it live all the time, exactly how you're teaching it, it's very sticky stuff, right? And there's different components that I find really important, like balanced price ranges and some of the things that ICT's touched on, but he hasn't really touched on dramatically. Those things that I highlight, certain things. You guys can kind of see why too, like why balanced price ranges are so helpful, you know? Um, but yeah, when it comes to, give yourself grace, Mike, and everybody that may be thinking like, oh, I gotta hurry up, or like you're beating yourself up because you think, oh, I should know this by now, or this or that. Give yourself grace going into the next year. Don't be aggressive towards yourself. Be, a good coach. If you were your kid, how would you teach that person? How would you teach that child? That's the perspective you need to have on yourself when you're learning. You should never be negative. You should never be discouraging. You should never speak with defeated language. You know, uh, ICT, I think, has mentioned before that us putting these expectations on ourselves, like why is it not happening fast enough? Why this and that? It's in the realm of negative thinking, right? Of course, we all do it, right? I'm not saying that, I don't do it. But this is like a perspective you do want to consider because ICT has talked about it. He's talked about a lot of different things related to this that we all do subconsciously, just as human beings, especially with our goals and where we're trying to get to. But just remember that if something feels like, oh, maybe that's a negative thing to be thinking, it probably is. And you probably want to try your best to manage it. And there's a healthy level of these things that should be present, obviously. You can't be super delusional. You got to be somewhat delusional at first, because how else are you going to continue to stay motivated in the face of the negative things that happen, like losing trades, doing it wrong, feeling confused and lost and like just not knowing what to do. How else are you going to stay confident through that? You got to be kind of delusional, right? Like, no, this is just what it is. I wouldn't say it's delusional. I think like overly optimistic, like exaggerate the optimism, right? And try to sustain that. Because I can guarantee if I didn't do that, I probably would have quit. I've been through a lot as a trader to get to where I'm at, and probably a lot of stuff that most people wouldn't have gone through. I've lost at least I've lost at least $24,000 in the first, what, 2 years? Well, the first year I lost $24,000 just in a private account, personal account. That's not even including the amount of funded accounts that I lost. So I probably lost more, close to like 40,000 in the first year. And that was all the money I had, all the savings, and I was becoming a new father. I had all these things that I had to overcome. And I was I was having that exact mindset. This needs to happen faster. The world is spinning around me and there's just too much stuff going on. I had a failing relationship. I had a kid on the way. I lost my job. I mean, stuff was just bearing down on me so aggressively, to the point that, I'm almost certain that if someone else was in my position going through that stuff and lost all their savings while COVID was happening on top of it, they would have just been like, no, this is too much. Where's the safer route? And by the grace of God, I didn't quit. I never lost sight of the vision, you know? And then you fast forward now, and it's like that was just like a drop in the bucket, what I lost in that initial phase. It's going to be the same for you guys if you just don't quit and you be responsible. I do my best to get you guys that responsible mindset. I try to help you guys know how to think about things properly, but I can only go so far. I can only give you advice. I can't force you to make the changes that are required, that I feel are necessary mentally and technically, right? Risk-wise. So there's a lot of stuff that's going to be up to you guys, but hopefully a lot of the perspectives that I've shared this year have been helpful. Hopefully today's trading made sense. Hopefully some of the things that I just mentioned can have an impact on you, especially with like some of the expectations we put on ourselves, right? Again, it's good to have expectations, but just remember, this is the hardest thing probably to learn in the world. It's definitely the hardest thing that you can possibly do to make easy money. You hear the cliche thing all the time. It's the hardest way to make easy money. That is like an understatement. Okay? Because you're against yourself. You're fighting against yourself and all the things that I've mentioned today, and things that I've mentioned before about like psychology and whatnot. Battling your personal life, battling doubters, battling people that, you were excited to tell about this, but then when you're not making money, they start telling you that, oh, you're stupid, or this is a scam, or all this other nonsense that they say that, comes from a place of ignorance, that they just don't get it. They don't understand what we have to go through. And maybe stuff that we go through as traders is not something other people are willing to go through, right? Like I mentioned, the way that I started, the things that I had to go through and overcome, pretty much everybody that I know in my life, if I was more vocal, they would have told me to quit. Guaranteed. But I knew right away that I'm going to be judged, and I don't have time for that. And then ICT started talking about this stuff, and he reassured me and his students that, well, all of us are his students, right? But he reassured me that, it's best to just keep things quiet until you have things that you can prove. But even then, once you get there, you're not going to feel like you want to prove to anyone anyway. Well, who cares? It's not their business anyway. They can't spend your money. And they may be excited for 5 seconds, but then they may get jealous. And then it's just a whole bunch of nonsense that could be avoided. So, I definitely want you guys to always think about these things. We talk about psychology a lot and all these different things, but, and we're going to keep doing it. And so hopefully next year, because of what we've talked about this year, technically, including today, hopefully today made sense as well. But hopefully everything that you guys have acquired from this channel has been of value to you. I tried my best this year to give you guys as much value as I can. I made sure that I was on every single week in my private group. I've been with them every single day. So same thing to you guys. I gave you guys a promise last year. I gave, the small group of, people on YouTube a promise too. And I feel that I've kept those promises. And I hope that I've been able to deliver more than you guys probably expected through the content here and to those of you in my private group. And I hope to continue to keep that vibe going. I intend on having that same vibe, doing the same thing that I did this year, proving it yet again. Let's see if we can outpace this year's overall performance, which I don't know how that's going to be possible because we basically were correct most of the time. right? And so I hope that most of you guys can also have that that experience as well, and then sincerely, finally prove it to yourself if you haven't already, that this is in fact the thing that you will be doing for the rest of your life, because it's worth it. Even if you do it part time, it's still worth it. Okay. So yeah, Fancy said, how can I talk to you offline? So you can hit me up on Instagram at WMG Trading, or if you wanted to, jump on jump on Zoom with me all the time. I have my private group. Um, I don't have any one-on-one availability yet till the next quarter, but I do have access to our live calls every single day, which we go live every day. You won't have like the archives with that first tier. That's more or less saved for lifetime or private one-on-one students. But you guys get access to all the different resources and stuff in the private group. There's so much in there for what's being basically charged, I guess you could say, right? It's basically a protective wall. It's cheaper than everybody still, while providing more value than everybody on social media aside from ICT. And then again, I'm constantly live every day. You get a chance to ask me questions. You get a chance to bounce ideas off of the other students that are there. You get to see their progress and things that they go through. You get to hear us answer, not only me answer, but the whole group as a whole, helping each other answer all of the questions that may arise while we continue to help lift each other up. And honestly, I don't think there's anything like the private group that we have. I don't think there's students that are present in any other community like we have in our community. They're knowledgeable, they're smart individuals, they're peaceful, they're very positive, motivating, always willing to help each other, which is the exact culture that I wanted to build in the private group. And I'm trying to do that here too on YouTube with you guys in the YouTube family. I'm never going to leave you guys out either. I got students like Fritz, right? Tony, they've only been here on the YouTube channel, and I've seen them make massive strides in their development, and they're a positive vibe too. So I feel like the culture's bleeding on into this community as well. But yeah, again, if you guys want to get in contact with me personally or be live with me every day, again, there's an option for that. The link's in the description. If you guys want one-on-one type of work, we can talk about that a little bit closer to the second quarter. If you guys want lifetime access to the private group, that's always available as well. That comes with one-on-ones as well, one-on-one access. But again, the next portion of students that I'm going to allow myself to teach one-on-one has to come after the second quarter, because I already have 19 students that I'm working with. I have 3 live calls or 3 one-on-ones today. I have 4 tomorrow. I have a couple more every day, pretty much, till the next quarter, unless students choose to reschedule or stuff like that. So that's why I'm only one person, right? So I can't always work one-on-one, but I do my best to have that same type of vibe when everyone's kind of together in the group call every single day. So so yeah, again, those are your guys' options for those that do maybe want to get more involved with the community. If you do want to be part of that private group, it is available. It's very reasonable, right? It's purposely it's purposely priced the way that it is to undercut all these people that claim they're mentors, while also making sure that we have only serious people in the group. Because I got to watch out for the people that are in the private group too, that have invested in me and are serious, that don't want to deal with a bunch of shenanigans, that want to actually be in a community that's focused on their development, not just signal junkies flying all over the place. It's a true apprenticeship that's priced cheaper than everybody, on purpose. So the barrier to entry is reasonable, but it's also enough to keep scammers out and idiots that want to come and cause chaos, right? So yeah, that is how you can get more involved with me and in the community. And again, I'm always available on Instagram as well, Fancy, and anyone else. I always make it a point to get back to every single DM. I get a lot of DMs over and over, all day, every day, especially on hard weeks. You guys hear me talk about it sometimes. Hopefully today I won't get something heartbreaking in the messages. But yeah, I hope and pray, right? But yeah, again, hopefully everything made sense. Hopefully this year's been something useful for you guys. We're going to continue to have the same vibe all through next year, and until I decide not to do it anymore, which isn't going to be anytime soon. Okay. So yeah, do you guys have any last minute questions before we put a ribbon on it? Hopefully everything made sense today. You can see that it's been a very sporadic day, so I'm glad that we got in front of what we got in front of and kind of talked about that. And hopefully if any of you guys did engage, you followed the advice. Well, opinion, not advice, opinion, because I'm not a financial advisor, right? So yeah, let's see. Did I miss any questions? I didn't miss any questions. All right, well, with that being said, again, thank you guys for always supporting the channel. God bless each and every one of you. I look forward to helping you guys along and having you guys hang out with us even more in the coming year. I may add one more live call, kind of just depends. I have to see if that'll be workable. I think we'll be able to fit it in, but I got to decide when I would want to do that, and if that would be possible, right? So I'll let you guys know. But yeah, that being said, again, God bless you guys. Thank you so much for all the support this year. This will be our last live call for 2025. Great way to end the last call of 2025, ending on a banger high note, as basically the entire year has been with what we've been doing publicly. So hopefully all the stuff that we talked about today made sense. Hopefully this year has been a very liberating year, putting you in position to continue to grow and thrive in the coming years, right? So again, thank you guys so much for the support. Don't forget to like the video, subscribe to the channel, share the channel with anyone you think can get value or will get value from the stuff that we do here. And yeah, that being said, I appreciate y'all, and I'll talk to y'all in the next one. Happy New Year to each and every one of you guys. Be safe. Don't do anything stupid, okay? Because I expect to see y'all back here on the very next call. All right, so have a good rest of your day, you guys.